we're going to invest roughly $30 billion in the United States to expand Orlando and California.
This park is the most technologically advanced thing we've ever done, and we've done some pretty advanced things in our time.
Walt Disney World and Universal Orlando Resort, two of the biggest names in theme parks, are about to get even bigger.
We've got a lion's share of that investment coming to us.
At Walt Disney World, plans are already in the works, with expansions and facelifts being rolled out across several of its parks, including the largest addition to Magic Kingdom in the park's history.
This is a massive site, and we want to stay relevant, stay current, invest in our existing assets, and make new experiences as well.
Across town is Universal Orlando, the home of another iconic castle.
Now it's opening Epic Universe, a fourth theme park that's expected to double the size of Universal's footprint in Orlando.
It's so different than anything else that we've ever built, but certainly I think it's different than anyone's ever built.
A theme park Universal hopes will rival Disney World, making it a full-week destination in itself.
I think you might be passing Disney at this point, Mark.
But as these two theme park giants invest billions into their Central Florida properties, a dark cloud is hanging over Orlando.
Now, looming over the whole industry is concern about a potential decline in consumer spending.
Economic and political volatility has pulled on consumer sentiment, forcing travelers to forego U.S. vacations. In 2025, the United States is expected to lose $12.5 billion in international travel spending, a 22% decline from its peak in 2019. That trend could cost the U.S. $21 billion in revenue if it continues.
Can Walt Disney World or Universal Orlando escape a broader, prolonged period of consumer weakness that results from tariffs? No way.
So will Universal and Disney's billion-dollar bets on theme parks pay off? Or will a tourism downturn sour Orlando's epic summer?
You step in and you get to see all your favorite characters and all the surrounding environment and all the animated, substantive entertainment elements in it.
This spring, Universal Orlando opened the gates to Epic Universe. Costing an estimated $7 billion, Epic Universe is Comcast's biggest theme park investment to date. It also marks the first theme park opening in the US in more than 2 decades. Comcast is the parent company of CNBC.
When you walk in and you step through Peach's Castle and you're standing in Super Nintendo World, you feel like you've been dropped into the game.
Universal's flagship resort welcomes around 20 million visitors annually, a number it's hoping to boost during Epic's inaugural summer. Epic Universe includes 5 brand new themed worlds that combine a wide variety of new and existing IP for the park. How to Train Your Dragon's Isle of Berk, the Wizarding World of Harry Potter's Ministry of Magic, Celestial Park, Super Nintendo World, and a throwback to classic monster movies with Dark Universe.
One of the most amazing attractions I'd say that we've ever built is in that world. It's called Monsters Unchained.
While only 7% of Comcast's overall revenue, theme parks brought in $8.6 billion in 2024, and an additional $1.8 billion in Q1 2025. That makes Epic's addition a clear growth opportunity for the segment.
A reasonable estimate of revenue for Epic is about $2 billion on an annualized basis, with about a 30 to 35% profit margin.
Both Disney and Universal's parent company Comcast saw their share prices peak in 2021, as the post-COVID tourism wave saw pent-up travel demand spilling into theme parks. For both companies, the theme park segments are consistent performers, offsetting volatility in areas like film and linear TV.
Industry insiders are telling me that the media giant's parks divisions are more important than ever. A larger part of Comcast once it spins off Versant, which includes CNBC, and almost 60% of Disney's operating income comes from its parks division at a time of transition and uncertainty for its linear and film divisions.
For Universal, though, it still has a long way to go to catch up with Disney World's roughly 50 million annual park goers. But for its part, Universal is looking to go after another segment of tourists, thrill seekers.
The Disney product is more geared towards families and nostalgia, and the Universal Park is more geared towards teenagers, young adults, and contemporary culture.
Beyond the addition of Epic, Universal is also building out its hotel footprint in and around Orlando to 11,000 rooms.
We now have 11 hotels, and they're all very different, all really designed to cater not just thematically, but to different people's budgets.
Comparatively, Disney World Resorts' portfolio is more than double that, with 29,000 rooms and more than 25 hotel options. Still, Universal is hoping the addition of Epic will take Universal Orlando from a 2 to 3 day destination to a full week experience.
You will not be able to enjoy everything that it is we have to offer without being here for 4 or 5 days. You really need it all.
And while all eyes might be on Epic Universe this summer, Walt Disney World has some epic, or should I say magical, plans of its own.
I'm standing on Main Street, USA, in Walt Disney World's Magic Kingdom. Every single day, tens of thousands of visitors come down this street towards that castle, culminating in 17 million visitors annually.
Welcome, dancers, welcome!
Riding rides, taking pictures, eating pretzels, buying Mickey ears, and staying at Disney resorts.
We talk about the Disney bubble. Without that, we wouldn't be able to have that value proposition.
Now, with $30 billion being infused into its U.S. parks, Disney World has already rolled out plans for some major expansions and additions.
One of the places you'll see these changes is right behind me. Rivers of America and the Space Beyond is going to be home to one of Magic Kingdom's largest expansions to date, a brand new Cars-themed area and Villains Land.
We're taking villains that we know and love from their stories, but we have this chance to create a new place for them, a new environment that has not necessarily been seen.
Disney's Hollywood Studios will also be welcoming a new expansion with Monstropolis. Other projects are already in the works. Hidden behind this green wall is the future site of Tropical Americas, a new addition to Disney's Animal Kingdom, opening in 2027.
We're leaning heavily into the Maya culture.
To put in perspective how big that $30 billion investment is, in 2018, Disney opened Pandora, the world of Avatar and Animal Kingdom, an immersive world that cost an estimated $500 million to build, featuring what was, at its opening, the most advanced animatronic in Disney Parks history. Over in Disney's Hollywood Studios is Star Wars Galaxy's Edge. Opened in 2019, the entire 14-acre expansion cost Disney a reported $1 billion.
You have incredibly advanced figures like the Shaman on Navi River, or you've got something more nimble like BDX droids that can circle the globe very quickly. And rest assured that as we think about the investments that we're making in Tropical Americas and Cars and Villains in the future, all of that and more is being incorporated into the thinking of what we'll be able to bring to life for our guests.
In 2024, Disney's theme park segment raked in a record revenue of more than $34 billion, a 5% climb from the year prior.
Disney really is a theme park company that also makes films and television. So it's about 2/3 of the company's operating profits are coming from experiences.
On top of its announced $30 billion investment, last year the Central Florida Tourism Oversight District approved a historic deal with Walt Disney World. Remember Disney's political back and forth with Governor Ron DeSantis? Well, it quietly came to a close last year. Afterwards, Disney and the board came to a new agreement where Disney would invest up to $17 billion over the next 10 to 20 years. For its part, Disney got approval for several expansions, if it wishes to do so. In the agreement, Disney World got a green light to grow its maximum hotel capacity from around 40,000 to more than 53,000 rooms, a serious expansion from its current hotel capacity of 29,000. Still, Disney World has yet to announce any such plans.
If you think about a hotel company with 29,000 rooms now that we've grown to, and we really, after 54 years, continue to raise the bar.
The tariff uncertainty could put pressure on Disney World's construction plans.
Most of the rides, the big heavy-duty equipment in the theme parks are manufactured outside of the United States and shipped here. There's certainly a chance for impact from tariffs that's measured in the billions. A lot of the construction cost of a theme park is labor, and that would be only indirectly exposed to tariffs.
It possibly would raise the construction cost, the amount of investment needed. Probably the burden will come back to the consumer.
Meaning your theme park vacation could end up costing you, the consumer, more in the coming years. Vacations that are already pretty pricey.
The price hikes at parks was enormous over the last few years. Same for some of the food, just every time they could, they would either make packages smaller, higher prices, whatever. If that consumer is just pushing back on that.
The great thing about a great business is you can increase your prices because there just aren't sufficient substitutes for what you sell, and that's certainly true of Disney World. And so while Disney World revenue is above its 2019 pre-pandemic high watermark, Disney World attendance isn't.
But the real villain or monster in the story could be something that's out of Disney and Universal's control. Tariffs, economic uncertainty, recession fears, inflation, political volatility. Most of us go on vacation to avoid thinking about headlines like these. Unfortunately, they may now be crashing their way into your vacation.
In really harsh downturns like the financial crisis of 2008, and then of course COVID, Orlando has been terribly cyclical. Revenue in Orlando declined by a double-digit percentage, peak to trough during the financial crisis and much more during COVID.
Early bellwethers for the travel industry, U.S. airlines and hotel chains are raising alarms around softening consumer demand. As of April 2025, U.S. airline ticket sales are down almost 4% compared to last year.
At the end of the day, travel is consumer discretionary spend, and when people see capital market volatility, trade uncertainty, they tend to pull back in discretionary areas like travel, and we do think that's happening right now.
Hotel chains Marriott, Hyatt, and Hilton have all lowered their revenue outlook. Expedia and Airbnb both cited softening demand in recent quarters. This says consumer confidence took a hit in early 2025 on fears of tariff-driven inflation.
If you're uncertain how the economy is going to develop, then you're going to try to be more cautious in your spending. So that is something that is being seen as well.
A recent Bank of America report found travel demand in the first half of the year fell sharply in several states. Hospitality-dependent cities like Las Vegas are already showing cracks, with multiple casino layoffs being attributed to a downturn in international tourists, a demographic that spends on average 8 times more than domestic travelers. International tourists make up 8 to 9% of Orlando's annual visitors.
6.4 million international visitors that come to our area. They stay longer and they spend more money.
It could have an effect, a negative effect on our local GDP.
But if we revisit that Bank of America chart, we see Florida actually saw an increase in tourism in early 2025.
The opening of Epic this year, together with what is going on, it's a countering effect on the overall.
Many of the people, both internationally and domestically, had already planned their vacations for this summer.
Not only is Epic's opening helping bring money into Orlando, but it could be the thing that helps the city survive a broader consumer pullback. Hotel and vacation home bookings climbed as much as 14% in the Orlando area around the time of Epic's opening.
So far, in 2025, the numbers are extraordinary. We believe that those numbers will continue.
I know people who are like, whatever happens, they still need and want to go to the theme parks.
When it comes to this multi-billion-dollar battle between these two theme park giants, analysts believe Epic Universe's opening isn't just a tailwind for Universal, but also a big driver for visitors into Disney World.
Disney's Parks Chairman Josh D'Amaro is bullish, saying, quote, if something is built new in Central Florida like Epic Universe, that new tourist coming into the market is going to have to visit the Magic Kingdom.
The numbers speak for themselves because Epic is having an amazing opening as far as ticket sales and driving that demand. You look at Disney and SeaWorld, and they're seeing incredible numbers already in this year.
Disney said that their forward bookings for the prime months of the theme park season are up mid-single-digit % against last year.
So will these historic theme park investments pay off? Well, when it comes to Disney's $30 billion in expansions,
in the long run, it almost certainly will. We have objective financial evidence that historically very large, tens of billions of dollars scale investments have paid off.
For Epic, however, Universal's newest edition might take a little more time to turn a profit.
Comcast will require years of growth and price increases to drive Epic towards a really robust financial return that meets the level of the more seasoned portfolios at Universal and Disney.
We build these parks and these assets for a very long future, and we're not in it for a short term.